Hey everyone. Hello, hello. Let me see some messages. Good afternoon. Hey, good morning, Sam. Hello, Octave. Hi, Shri. How are you? Hope everyone is doing okay.
All good. Good morning, Vivek.
Hey, morning,
Good
morning,
morning.
Aditya. Hey, morning, Pankaj. I see some new names today. Uh, Looks like more people are getting interested in the market, which is good. It's the best vehicle to build wealth, so why not? Why not? So, anything specific you guys have in mind that you want to talk about today? I mean, it is earnings season, so I do want to talk about some earnings, and of course, we'll discuss some stocks. Um, anything new on your agenda? Impact of tariffs, market and government turbulence. So we can only talk about policies and not politics. And what turbulence? So we look at it. What market is back where, or not even back. I think it's still up, right? It's still up, maybe close to 1% for the year. S&P 500. So are we done with the correction? We haven't had a correction. Shri, what we even talking about correction? Look at correct SPY, or we're still up 1.6%. So who cares? Uh, yeah, thank you, Ramesh. Yeah, welcome to newcomers. Anyone, uh, you know, someone who's new want to introduce themselves and see what they are looking to get out of this session.
Hey, hi guys. My name is Vishwanath. I'm joining this session for the first time.
Welcome.
I found this on the Meetup app, so thought of joining and get some insights on how you guys analyze the stocks, bonds, and the portfolio management, and how you guys analyze the earnings. So that's my purpose of joining this.
Cool. Thank you. And what kind of are you like investor, or are you a swing trader? Are you day trader? What kind of
No, I'm a
how do
long-term
you interact with
investor.
market?
Yeah, I'm a long-term investor. I work as a senior software engineer at Intuit full time, so I cannot fully do swing trading or the day trading. So I invest on the long term.
Cool. All right. Welcome, Vishwanath. Yeah,
Yeah.
I've been oh, in the same boat as you for 23 years before I decided, okay, I want to do full time focus on investing. Uh, but yeah, we will talk about stocks, and based on what I see in the week, we'll bring and talk about what's currently happening in the market. We'll review stocks. Right now, it's earnings season, so we're going to review some of those earnings as well. If there is any particular stock you guys are interested in, do let me know, and we can bring it up for next week. If you want to do a detailed, look at the stock from analysis perspective.
Yeah,
Good.
okay.
All
Yeah.
right. 5 straight days of dumping until 10 minutes algo at a closing of Friday. Yeah, I also thought, because the Friday the market was kind of red after the meeting between President Trump and President Zelensky, and then at the end market was high. I wasn't sure what happened because I think I was making lunch at that time. But in any case, looks like later on I heard it is index rebalancing. Fred, I don't know if you found the same reason, but I heard somewhere that it was the index was rebalancing that was happening, and a lot of buying happened. But who cares what happened in the last 1 minute or last 5-10 minutes? Yes, it was driven by some algos. But overall, I mean, I know I also got some messages from my friends saying, "Hey, what's happening in the market? Why is market going down?" I'm like, "Where? We got 2 years of 25% growth. I'll be okay with if the market stays sideways, guys. I'll be perfectly okay. We don't have to be too greedy, right? So I am not saying, uh, so." when someone says the markets are down or markets are going crazy, come on, just extend your time horizon. I think we are still in much better shape than where we were a couple of years ago. So I'll be perfectly okay if market doesn't do anything this year, right? Just that especially in the markets, that's why we are in the market. The returns are a little bit lumpy. You can't expect it to be straight line or smooth line. It has to be lumpy. You got 25%, you got 27%, and this time it may be -5% or maybe 0%, right? Possible. But we just can't pick up one particular year and say, oh, this is not performing. So I really want to have my thesis in terms of, hey, I'm looking for next 20 years of investing. Right? So really don't care what happens this year. So that's our focus. SMH was down 7% in a week, and why not? We'll look at the chart. NVIDIA is down for a week, what, 7-8%, and NVIDIA is the biggest component of SMH. So I'm not surprised that SMH will be down. I think even the other chips or chip as well as the ancillary stocks, right? Your applied materials, look at ASML, TSM, Broadcom. I think all of those were down. Only at least one stock on the chip side. I don't know if was down or up this particular week, but the one which has been going up over the past few weeks is Intel, right? Something that we consider as a dead stock. That's a stock that has been going up, and that's on the rumor or the news of Intel being broken up into the foundry and the other business, and then maybe selling it out to Broadcom plus combination of um, TSM. So let me just bring up the semiconductor. So if you look at semiconductor, last 1 week, uh, Intel has been down 1 week. Yeah, everything was down. Lam Research down almost 11%, NVIDIA 7%, TSM 8%, ASML 4%. Yep. But year to date, Intel has been up 18%. Fred, just repositioning end of month, you can see that on the Delta Gamma 10-minute algo. Yeah, I don't even look at 10-minute algos, but someone who's looking at 10 minutes or minute chart, there is some nice information from Fred on this one. Intel also finally will have ASML machine that boosted INTC interest. So Intel is the first one, I guess, to get the high NA machine, and they are I think the second one probably is SK Hynix who's going to receive it. I do know that during the ASML conference call, they mentioned that the customer has accepted it. So I guess it's, probably they'll start using it to build the high-end chips. But they can't compete with TSMC. Let me put it straight. Unless, in terms of producing the chips at the right price point. So Intel will continue to need a protection, and I guess that's my thesis of investing in Intel. Whatever little amount I have it is strategically important, right? But I think it's very difficult to catch up with TSMC, even if you can get all the high-end chips. Producing the chips at the cost at which TSMC is able to do in Taiwan is not going to work out. I mean, so the other reason the Taiwan is investing in US, so their own cost of producing chips will go high. And I remember I think TSMC had mentioned during their earnings call that they are looking for around 2 to 3% hit on the gross margins because of the plants that they are now building in US, and that will basically be producing a chips which are more expensive than the rest of it. So overall, as a group, they will get a 2 to 3% hit on the gross margins. But I think still a lot for Intel, lot to catch up for Intel. They kind of lost the playbook, said no to Apple, stayed their design and manufacturing, very closely tied together. So, but can it turn around? Maybe. I mean, we are waiting for Boeing to turn around. I'm waiting for Intel to turn around. But right now, the market is excited because the previous CEO, Pat Gelsinger, he did not want to break up Intel into Foundry as a separate company, but that's why he was ousted. The new co-CEOs, or maybe the board is open to break it up as a Foundry and the chip business to separate business, uh, chip design business and the Foundry as a separate ones. Probably that will have a more value, and that's why the market is getting excited, saying, "Hey, someone will buy its Foundry business, maybe."
I have a question.
Sure.
So stock analysis is the main tool do you use? Do you trust to do to do the research?
I use stock analysis to get the basically the data, right? Your three financial statements.
Okay.
Yeah.
What are the tool do you use to
I
Taking alpha?
no, I mean I look at I read many research reports. So I'll go and read research reports. I'll read some articles, but at the end of the day, I'll frame my own opinion. I have my own document, investing thesis document against, many of the stocks that I own. And I go through the earning transcript, go through the financial statements. I have my own framework on which I will analyze. Today, you will see some of the things that I look at the companies, and
Okay.
that's how I build it. So my idea of the way of my investing is listen to everyone, gather information, but finally you have to build your own conviction. You can borrow trade ideas, but you can never borrow conviction. For conviction, you have to put in the work. So, so the reason why I use stock analysis is because let's say if I go to any particular company, let's say I go to Intel, this is which I'm most interested in, right?
Got
So,
it.
yeah,
Do you use the free version or you have the paid version?
I have a paid version because then I can get last 10-15 years of financial data. Free version, you only get 3 to 5 years.
Is
And
that the only difference?
I don't know. I'm not looked into the details of what else is not in the free version.
Okay.
Yeah. So, because when I'm looking at a company, I also want to look at, for example, if I'm analyzing NVIDIA or any other, let's say, chip company, yeah, last 2-3 years have been great because of AI. How did the company perform if there was no AI? So I go back and look at, let's analyze its performance from 2021 and 15 year prior to that, right? So that's why I need a longer term data set, and I think they do provide 15-20 years of data set. Any other question? Let me see if we can get through the
Does
question.
anyone here do trading?
I think we do have a few people here. Fred is a
Okay.
day trader. I don't know Ross, but there are a few who trade on a daily basis. I mean, I do trade daily basis. Don't get me wrong, but most of my trades will be either right now. I'm trying to build my April portfolio for options, and once I have that ready, then on a daily basis, majority of my trades will be trying to hedge, right? Either closing of hedging or opening a new hedges. So that one, but I do not trade into a stock assuming, okay, I'm going to dump the stock in the next 2 months if it gets 5%, 10% move. So
Okay.
if I'm building a position in a stock, I'm building it, maybe trying to hold it forever, unless it gets, egregiously expensive, which we have some stocks that have become, and then I have sold some of them. So I am I don't know how should I put it. I'm on a long marathon journey, but every day I take a one step forward to make sure I stay invested for the longest period of time. And that everyday step could be, hey, how can I not get scared out of the market? If I can reduce a little bit of a risk, maybe by reducing the delta of a portfolio, yeah, I'll do it. That's how I look at it. Shri says places trades every day. I do it every day. I think on a Friday I had closed a lot of my hedges, and on now I think starting Monday we are at but the most optimal time to start doing our April trades, because the April expiration is about 45 days. So I started building April portfolio from this week onwards. I think I already have a few days for April.
Okay,
A
so
few
you're
trades open for April. So now April is 47 days. So we'll
so
be closing the March one and opening April.
you trading is doing options. It's not like buying stock and selling on the same day or
No. I don't buy and sell the stock at the same day. You'll get to know when I buy or sell the stock. If I have done any buy or selling that week, I'll come and talk about it. Yeah. So, for example, I'm going to talk about last week. Did I buy or sell last week? I can't recall. But today I'm going to talk about what did I buy, because I did buy a couple of stocks and tell you what's the reason and why I bought it. Or when I'll sell it, I'll tell you why I sold it.
Vivek, are you mostly into buying the stocks, or do you do short selling towards, like, you do both? Like, you make a balance between long and
I'll I'll don't do short sell of individual stock. Individual stocks. I might do some ETF, but my if I am short on a stock, I'll probably sell a call or call spread, not do a short stock.
okay.
Because individual stock going short is very risky. I mean, maximum you can make is whatever the price at which the stock is trading, and maximum you can lose is infinite. Right? You just need one bad trade and you can be wiped off. So I don't want to even have that, that possibility even in my portfolio. I mean, we'll talk of Melvin Capital, right? What happened to him? They were the right Gabe Plotkin of Melvin Hedge Fund got wiped off because of GameStop. It was a short, big position. Over the career that Gabe built in, and the reputation that he built in the Wall Street, got shattered by a Reddit crowd. Right, one stock. Same thing have happened with a lot of others. So I don't even want to have that possibility. If that means little less return, I'm fine with it.
Cool. Thanks for putting your perspective there.
Cool. All right. Thank you, Fred, for sharing what from options perspective what our philosophy is. Yeah, and we have met in some tasty trade events as well. But yeah, I've followed them for years, and that's where I'm more accustomed and used to following their, I would say, follow their education and trade like a tasty trader. But if you go on Tasty Trade, they will probably talk building old portfolio only using options, because you can get similar exposure. But I'm more interested in analyzing businesses. So I am bigger on a stock side. Options I use to manage risk and all that stuff. All right, so let's get into today's session. Any other questions before we get into today's? I think I addressed all the questions, right? Okay, welcome everyone. This is our discussion number 269. Maybe this year we're gonna hit our 300 mark, which is amazing. When we started this 5 years ago, I had no idea where it will go. Right, we'll started a couple of friends. First meeting on Zoom, then I say, hey, let's use the meetup, and maybe someone else might be interested. So yeah, pretty happy to see that folks come in every week, and I don't take it lightly. That's why I'll bring in the content. But if you have any specific questions, feel free. I want to make sure that the time you spend here, 2 hours, maybe 2.5 hours generally, is useful. And when you go back, you feel, yeah, you know what? I learned something today. I learned in that session. So today, what I have in my agenda was to look at some of the earnings, right? Coupang, Salesforce, NVIDIA, AXON, Zoom. Also, like I do every week, a quick look at what's happening in the market. Not that I'm going to change our position based on what happened in a 1 week in the market, because no one can forecast what is going to happen, but we should know where we are, right? We don't know where the market is going, but we better know where the market is right now. And today I'll also share what I hold, top positions in my portfolio. I think someone had asked me, do I open source it? I said, I want to be transparent in terms of what I hold, what stocks do I hold. So I'll share that position. We'll look at crypto, what's happening in the crypto, because now crypto is getting integrated into traditional finance. So it's, you like it or not, it's gonna get into your portfolio, right? So it's just a matter of time. So it's pays to look at crypto as well. All right, everything that we discuss here is only for education, and nothing out here is financial or tax advice, right? So do your own due diligence. I said you can borrow trade ideas, but conviction you have to do. You have to put your own effort. All right, so look at a high level. I know people are saying, hey, why is there is volatility in the market? What's happening in the market? But overall, looks like the market has been flat, right? So we did have a volatility on Friday. We had volatility on last Friday, the previous Friday also. And somehow that's, some of things are driven by the concerns of growth. Of course, there is a trade uncertainty. We don't know where that, what tariffs and which countries, etc. we're going to implement the tariffs. I know for Canada and Mexico, the tariffs are supposed to be on from Monday, right? And I think in China somewhere in April. But again, we can never know based on, until it actually happens, and then what companies might be exempted, etc., etc. So we'll see. But markets will react. Markets will immediately react, and now we have an algos and all that stuff, which will just go and trade based on what the news is, right? Whether there is a long-term impact or not. We had a geopolitical risk after the meeting between Trump and Zelensky. There were some words uttered around, third world war, and the market was red. And of course, a deteriorating consumer confidence coming from Michigan Consumer Sentiment Survey. Consumer, but that some consumers, they are not feeling good, and I think that's also consumers say something and do something little differently. So I don't know. But it is good to see some froth getting out of a market, right? Some of those retail favorite stocks, those bubbly stocks, sold off. So few of them that we have also talked about earlier, right? The Big Daddy Palantir sold off from the high of 125 to now 85. I think it is still expensive at 85, but market can do, market won't listen to me. And the worst mistake that I can do is to say market is wrong. Market will price at whatever price it want to. And I feel at 85 it is expensive, but I'll still hold the stock. I talked about it. It's my lottery ticket. I cannot say that I'm investing in Palantir at 85. Yeah, I'm a little bit gambling in Palantir, and that's fine. If you have a gambling itch to scratch, that's what it is. Other stocks like Hims and Hers, again, very popular among retail. I think AppLovin, uh, that stock has gone crazy. Now there are a couple of short reports came out. Remember, we looked at one short report and AppLovin 3 weeks ago, 3 or 4 weeks ago, and I think it was like this week, there are two new short reports on AppLovin has come out. AI washing. Yeah, I'm not even looking at some of the smaller AI stocks. I mean, the AI company stocks like Microsoft and the Google, they have corrected, but not at the scale at which some of these retail favorite stocks have corrected. Right? So, but it's good to see some of this froth coming out. I think a lot of new investors are learning that market doesn't always go high. It doesn't always go high. Eventually, in the long term, the stocks will move to the value that the business is generating. Right? In a short term, year or 2 year, it's all dependent on momentum and the mood. In the long term, it's dependent on the ability of the business to generate, revenue, to generate free cash flow. So, and it happens. The momentum is on your side. Sure. Even the crappy stocks, crappy businesses will go high. We have seen it many times. It's not the first time. So, and then when the momentum goes out, even the good stocks will get punished. We have seen that during 2022 when the momentum was out, many of the good stocks were thrown out, and we were talking about it. Some of the stocks we looked at it, guys, we are just throwing the baby along with the bathwater, and that was a good opportunity to pick some stocks. So always have your watch list ready. In the watch list of a good business is ready, because when the market behave irrational and will correct it, it doesn't look at it's a good business or bad business. you know uh, when there is too much of leverage, and then when there is a cleanup happens, then people tend to sell what they can, not what they should, right? In some cases, when you get your margin calls because someone is over levered and the market reverses and goes against the direction, brokerage will sell whatever is liquid to sell. They're not going to wait and see, is this long term is going to work or not work. So, and the third is like a lot of these, let's say NVIDIA and some of the good AI plays with good businesses have sold off in the recent times, because hey, if you need to generate cash, maybe it's a tax season is coming up, maybe you're a little afraid of what the market's going to do in future, in next few months, what do you sell? Human, as a person, we will sell the stocks which have done well, because I don't want to lose the gains that I have in the stock. So first stock people will sell would be the stock that has gone up 100%, 200% up, irrespective of whether the future of that business is even better than where it currently is. The whole idea, the thinking that goes in our mind is, let me capture these gains. It is, and the stocks that have not worked, and it could be because that the business is not really good for those stocks, we'll still not sell it, we'll still hold on to it, because we have a loss aversion, right? It is very difficult for us as an investor or the trader to actually take a loss. So we will tend to sell our winners, which is a mistake. We should always water our winners. And I still hold the losers. It's very difficult to sell the losers. So when you see the turmoil, and I'm looking at, okay, Nvidia sold off 8% after earnings, and we look at the earnings, and that's correct. There was no reason that Nvidia should be so much down. But if you are a little jittery about the market, you want to make sure that all the paper gains that you have made, you don't lose those paper gains. So you're gonna realize those gains and sell it. That's what I also noticed. American Association of Individual Investors. So now we're looking at the percentage of investors that are now bearish is now 61%. This is the highest since September 2022. I don't know from where. Now, when majority of the retail investors are bearish, if you look at the fear and greed index, it is an extreme fear. I think it was 2 weeks ago, one of you asked me if I've seen this index, because every week we look at fear and greed index. If I've ever seen that index in an extreme fear. Who was that person? I forgot, but someone had asked. Your wish has come true. Now we are in extreme fear. And I think I mentioned at that time, if it goes in extreme fear, I will go out for shopping. And now this is the time where, these are generally, I take it as a contrarian indicator. When market is in extreme fear, that is when you should go out and open up your purse and do a little shopping, because now you can find the things, even the good brands, on discount. And yeah, I like discount. So, and where we should, when markets move to the new, to the greed or extreme greed, that's the time when I don't want to put any more bullish positions. That's the time when we have to be fearful. We have to go against what the general market is feeling. The maximum markets are the riskiest when everybody is feeling risk free. That's the time when the market is the riskiest. When everyone is talking about recession, probably we will not get recession. We will get a recession when everyone is very optimistic about the markets. That's what generally happened. We saw that in 2023. Economists were predicting 100% probability of economy getting into recession in 2023. That was the common, I would say, sentiment in the market, that 2023 market will enter into recession. We did not. Reason is, when everybody is looking at, oh my God, the economy might be worsening, you change your behavior. Companies change their behavior. Companies started to lay off people. Companies started to become more efficient in their operations. They brought down their cost. Startups start to talk about free cash flow. When was the last time you hear startups talking about free cash flow? But yes, they did. Companies focus from moving from revenue at all cost to growth at reasonable prices, right? GAR. And because the companies already changed their operations, we did not enter into recession. So I generally take it as a contrarian indicator. If now we are in extreme fear, maybe it's a time to shop. I see some comments. Jay saying market can remain irrational longer than you can remain solvent. Yeah. So don't go against. That's why I don't want to go against the market saying, oh, market will correct. I am right, because how can market be so crazy? Right? Someone asked, right, do I short a stock? The reason I don't short a stock, because the markets can stay crazy and can continue to push up the stock price longer than my portfolio can remain solvent. So I don't want to go against that. Rebalancing, sell winner or trim them and buy more of not worked. Rebalancing is not buying more of not worked. You have to find out why it did not work. If it's a crappy business, buying more of is not going to rebalance your portfolio. You're basically putting your portfolio on in the direction where you don't want to go. When you say rebalancing, generally look at from a risk profile. You want to rebalance your portfolio. At a high level, the rebalancing more related to your asset allocation, right? So when you're trying to rebalance a portfolio, look at a very high level on, do I want to own stocks, bonds, alternative assets? What my mix would be. Selling the winners and buying the stocks that have not worked is not rebalancing. I think that's a lazy way of saying, oh, you know what? NVIDIA has worked, Intel has not worked, so I'm going to buy Intel. Or AMD has not worked, I'm going to buy AMD. Oh, no, these are two different companies. NVIDIA is all about GPUs. Intel is like nowhere. Nobody talks about Intel in GPUs. It's all about CPUs. Intel, AMD are forming that consortium to make CPUs relevant. Right? But what if the GPUs become so cheap that we don't need a CPU? These companies will go out of business. So those who rotated money out of NVIDIA and put into AMD, saying, hey, I made like double my money or tripled my money in NVIDIA, AMD hasn't worked out, let me go into AMD. AMD didn't work out for them. That trade did not work out at all. I don't know. I'm not in AMD, but I don't think the AMD is like all. AMD has been down for the last 1 year. So if you sold off NVIDIA saying, hey, NVIDIA, in 2023, 24, where was NVIDIA's peak? And okay. Yeah, so even for the last year, NVIDIA has done much better than AMD, despite the fact that NVIDIA was already a winner a year ago. So you need to look at stuff that has not worked. Why do you expect it to work in future? So I don't call that as a rebalancing. Um, I think that's more of a lazy way of saying, okay, all companies in the same industry should work. Doesn't happen. Pankaj, is this the lowest sentiment you have seen? In last 1 year, yes. But I think I've seen lower than maybe 2022 maybe. But this is last 1 year. If you look at it, we got a similar sentiment around August. Remember what happened in August? What was in August first week? Pop quiz. Let's see how do you remember. What happened in August first week? Why there was extreme fear in the market? Anyone recall? Oh, sorry, you can't speak, so you may have to type. Anyway, so August first week was a yen. Yes, Marisa, you're right. The carry trade blew up. Yen carry trade blew up. And then what the market does? Market will sell off everything, irrespective of whether your company has any business in Japan or not. So when the August first week, I recall, between August 3rd and August 5th, that it was just 1 week of August, market sold off. And I'm looking at some of the companies that I hold. I'm like, they have nothing to do with the yen. They don't have much of a business that in Japan. Then their revenue from Japan is not even there. And the market is selling off that stock also. So that was a good opportunity to go and buy. And if you're still bullish on that, to go and buy some of those stocks, because when there's a fear, everything gets thrown out. So, but now we are looking at the similar one. And I'm not saying that the market will now turn around and it will go up. That's like me trying to be cocky and say, oh, once you're in extreme fear, you have to move to the fear. But I'm saying this is a better position if you want to buy something than when the market is in a neutral and a greed position. It's always relative. It doesn't mean that it may not go down. Nobody knows what's going to happen in future. Right? But today, relatively, the stocks are at a better valuation than they were a week ago or 10 days ago. That's how you need to interpret this. So what I did, I had some shopping time. I closed out some of my short or the covered calls, some of the hedge trades. I added a little bit to my long stock position, which I'm going to talk about. And I sold as put spreads basically on, some of the other stocks. So essentially all these are delta positive trades. Those who trade in options would know it. Basically increasing the little bullishness on your portfolio. And I was like, if the market tanks down another 5-10%, maybe I will make my portfolio, increase little, put more little bullish trades on my portfolio. And when the market is in a fear and greed, all I'm trying to do is to sell the calls or covered calls or call spreads, trying to make my portfolio a little less bullish. Right? So that's all. Someone asked, right? Do I trade every day? Yes, most of my trades every day would be around trying to manage the risk on the portfolio. Right? Not trying to buy and sell the stocks immediately. Maritza said, yeah, it was me who asked when it was an extreme fear. But what's interesting is that it was there in September 2022. Following month is when the bear market had ended. But this time it's happening early in the year. Yeah, I mean, it's not based on the calendar month anyway. It's based on, hey, what's happened in the market suddenly and how the market is feeling about it. So, and we know that we already had 2 good years. And if you're going to get another 20%, this is going to be only the third time in 75 years. Oh, sorry, second time in 75 years that we have 3 consecutive 20% plus return in the market. It happened only once during the .com, prior to the .com. So I have no complaints about the market. If you're, I think someone on Twitter responded saying, If you are feeling jittery about what the market has done, or let's say this year, maybe it's a time to look at what are you holding in your portfolio. Markets have been pretty good. Right? You look at the type of companies that you're holding in your portfolio and see, what kind of businesses are they? Are they more sentiment-driven businesses? Are they more businesses that depend on lower interest rates? I think I've given this analogy earlier also. If the wind blows, if you have a storm and there are high speed winds, and if your house crashes down, don't blame it on winds. Look at what material you used to construct your house. If all you did was to use straws to construct the house, yeah, house will stand still as long as the environment is great, as long as there is no wind blowing, as long as the earth doesn't shake. But that doesn't mean it was a good material to build the house. Right? So build similarly, if you build your portfolio and let's say Fed says that they're not going to cut interest rate this year. I think that's what the market is now pricing in. Maybe look at your portfolio and say, why do you hold all the companies that basically need to raise funds? And now if Fed is not going to cut interest rate, it's going to be very expensive for those companies to raise funds, and hence the portfolio is tanking. And a lot of folks learned this lesson in 2022. In 2022, if your portfolio was consisted of high growth tech companies, which were great in 2021, it was a disaster in 2022. And everyone was blaming Fed for increasing the interest rates. I think we as an investor also deserve some blame for stuffing our portfolio with the type of companies that need lower interest rates. So that's what I'm saying. I don't go against the market. If the market is going against your portfolio, maybe look at your portfolio, because that's the only thing you can control. You can't control the market. So what's the point in cribbing about the market? Because we're never going to learn anything by cribbing about the market. You need to look at your portfolio and then say, maybe I need to change my portfolio if I can't withstand this volatility. Right? Another chart around S&P 500 monthly returns. February, on an average, actually is a negative return from 1928 to 2023. So maybe some seasonal stuff. And I can understand why, because maybe, folks need to raise cash, because now you're getting all your tax statements from your brokerage firms or whatever, some of the asset people have sold. Then they realize, oh my gosh, I got so much of a capital gains. I need to pay tax. I don't have a cash. Right? When you sell your stock and you made money on the stock, we don't take that cash and keep it at a side in a separate account marked as tax payment. We don't do that. That cash comes in, we're probably gonna end up buying some other stock, right? We're not that disciplined. So I can understand why February may be generally seasonally a negative month, because now you're realizing, oh gosh, we need to pay taxes. Taxes are coming due, so I need to raise cash. When you need to raise cash, you end up selling the stuff. What else? Another chart around Max 7 continue to lag. We look at similar chart last week also, but this is a little in a different way of looking. The same thing is S&P 500, and look at the Max 7 from year to date. So S&P 500 is almost neutral to maybe 1% higher, whereas Max 7 have lost value since the start of 2025. Things that worked in 2024, the 7 stocks that worked in 2024 are no longer working in 2025, except I guess Meta. The Tesla is down 40% from its all-time high. Tesla, year to date, it is down 23%, and yeah, from all-time high, it's down now 40%. Not, I think 488 was the all-time high, right? So from the recent highs, it's down 40%. So many of those so-called Mag 7s haven't worked out. How about NVIDIA? NVIDIA is down close to 10% for the year and 18% from its recent high. What else we have? Mag 7. Amazon. Uh, Almost 3.5% year to date, 12.5% drawdown. Google, 10% year to date, 17% drawdown. Which others are there? Which one am I missing? I've only done 4 or 5, right? Meta is the one which is higher, 11%, but still drawdown is 10% drawdown, but still up for the year. It's up 11%. So Max 7s haven't worked, but good thing is the other sectors are working. Right? The reason why the market is still up 1% is because of the other 493 stocks. Apple, yes. Apple is like unchanged for the year, but sitting at 7% drawdown. Right. So good to see that broadening in the market. So if your portfolio also have some energy stocks, also have some materials, little bit more diversified portfolio, you're still okay. If your portfolio is filled with Mag 7, yeah, you probably are feeling the pain. But come on, that pain is, you also had a lot of joy in 2023 and 2024, right? You are up like 40%, 50%, or those years where the rest of the market was up only 25%. So nothing is free. You'll get those volatility. Now, depending on what kind of investor you are, if you're okay with the volatility, yeah, fine. Who cares? But if you're not, then we need to look at our portfolio and say, maybe I need to reduce the exposure to one particular risk. Right now, if your exposure is to all AI, that has worked great for last 2 years. Maybe it will work this year. Who knows? I don't know how long it's going to continue to work. And I don't want to now wait and figure out why it will not work. Because when the things will start crashing, it'll not gonna ring a bell and say, hey, AI trade is gonna unwind 1 month from now. Right? That market will never ring a bell. So if I'm thinking, okay, I think we have had too much of a froth, maybe reduce a little bit of exposure to a particular sector. So question, what risk are you preparing for? I mean, if you're thinking that AI has run up too much, or from a sense run up too much without the perceived benefits of it yet. A lot of companies have been buying GPUs and market has been little forgiving. Yeah, build up the capacity. Prepare for the growth of a future. At some point of a time, market will come back and ask, dude, you spent $300 billion on building up the capacity. Are we able to even make money on it? And I don't know when the market will start asking these questions. But when market will start asking the question, if you don't have a corresponding revenue growth to support the capex that we are doing, that's not going to be that's going to be a little one ugly day, right? So if you have gains, maybe look at diversifying your portfolio, right? If you can't withstand the volatility, or reduce the delta in portfolio. When I say diversify means, hey, I'm gonna, maybe my next investment is not gonna be AI related stock. I want to invest in materials, industrials, pick other sectors, right? Or maybe I will gonna pick up S&P 500, right? That's the best one. If you really don't know how to analyze a sector or a particular company, I'm gonna stay diversified. So this year, other sectors are working in S&P 500. I'll pick S&P rather than picking up a tech sector. When I talk about reduced portfolio delta, let's say I don't want to put additional money, or I don't have it, or maybe I want to hold cash. In that case, I will look at, maybe I'm selling a call spread on some of my NVIDIA positions, or if you have a QQQ, maybe sell a call against it. Or if you are a little brave than I'll just sell a naked call against QQQ. Please don't do it unless you understand how to manage your risk and all that stuff. So that's reducing the portfolio delta, making your portfolio a little less bullish. Uh, or the last is, you're hedging your portfolio, which is what kind of a hedging and the reducing portfolio delta is almost the same, right? But when I'm saying reducing a delta, it's individual at a stock level. When I'm saying hedging is at my overall portfolio level. I don't, even if I don't own any XSP in my portfolio, I will just sell a call against XSP. In fact, I do have a call against XSP just from a portfolio hedging perspective. So that's the game plan. That is I would say for me, that's always been a game plan. But now I think this year probably, after 2 great years, we need to look at and see if the market doesn't cooperate, what you're going to do with your portfolio. And if you're like, oh, I got the next 30 years for me for investing, and I have my regular job which is giving me regular income, and it really doesn't matter if the portfolio goes down 10, 15, 20%, because you don't need to generate income for it, who cares? Then that's fine. Then just sit tight. I only share what I can do because I need to generate income and cash to run my household, right? But that's fine too, right? Just hold and sit tight and go through the volatility as and when it comes. So depending on what kind of investor you are, what your needs are, you need to adjust your reactions. Sam says, can you comment on Microsoft closing Skype and not selling for or further integration? I mean, I remember those days of Skype, I think 25 years ago. That was the best way to communicate to US clients. I was working in India, because making a regular, phone call on regular phone lines, super expensive. So I had a paid account on Skype. But who uses Skype? Zoom. After Zoom came in, then you got a Google Meet and everything. I think Microsoft, they just squandered the opportunity. And when Microsoft bought Skype, it was under, I guess, T. Ballmer. They just squandered the opportunity. Skype had at some point of a time maybe 400 or maybe 500 million users, right? And I think the downfall or why the Skype did not work was they didn't move to mobile. I never recall installing Skype on my cell phone. Did they ever make a transition? Maybe because I, yeah, no, 2009 we didn't have a Zoom. I remember using WebEx, but I don't think Skype ever made a transition from desktop to cell phone. When 2000, after iPhone came out, and lot of lot of companies, Meta, earlier called Facebook, they pivoted from being a desktop to a mobile app. Skype never did. And then WhatsApp came along, and then they just killed it. And why do you need to pay up? Now WhatsApp made everything free. So I think the Microsoft, they just didn't put enough of an engineering prowess and enough of a focus on Skype. So that's fine. I mean, they paid $8 billion or so. What is $8 billion on Microsoft balance sheet? It's nothing. It's a pocket change. So that's okay. It's not gonna hurt them. And now I think there are many other systems. Now Microsoft got its own teams. I don't know why maybe they integrated some stuff in the teams. I've not used Teams, so I don't know. But you can't have no Teams as well as Skype, right? There is which one you need to focus on. You can only focus on one and not confuse the customers. So if they're going with the Teams, that's why shut down the Skype. Cisco wasted conference calling. Yeah, I think there are many companies who were earlier in conference, then new entrants came in. What happened now for this year? US stocks have not been working, but Chinese stocks have been working. So if we look at year to date change, the stocks which are up like 81%. Any guesses which stock is this? Anyone want to guess 81%? You got XPEV, which is a Chinese EV. Then you got a Baba, which is up like 56%. Right? Then you got a Li Auto, JD. So all these Chinese stocks have worked. These stocks did not work over last, I think 2023, 2024, China was uninvestable. And I know I held through some of these stocks. I mean, I still hold it, of course, having a position size within the position size guidelines. So some of the stuff that has helped helping the portfolio is you have your diversification, you have a country diversification, right? You hold some stocks which are outside of US. European stocks have done pretty well. EAFE, right? They were like up what 7% for the year. So if you have diversified, you have exposure on other countries. Some years it won't work when the US is working. Now this year so far US hasn't worked, but other countries are working. Right? So these stocks, some of these stocks are helping the portfolio. Okay. So other thing I noticed was around this gold rush. Has anyone taken flights in the recent time from London to New York? Anyone flown from London to New York? So along with you, there were some curious boxes, wooden boxes or wooden crates that have arrived in the cargo hold of a commercial airliners. Say if you're flying United or British Airways from London to New York City, in the cargo along with your luggage pieces, there are boxes of gold bars, right? And they are collected by the truck. The drivers don't even know what they're hauling, you know. And what's so rush? Did anyone catch up on this news? What's happening with the gold? Why there is suddenly so much rush of taking the bars out of Bank of England vault and trying to get into New York? Nearly 14 million ounces of gold, 38 billion have flown since the election day. Now, if you go to the Bank of England and tell, hey, remember I gave you the gold, you were doing a safekeeping of my gold in your vault. I need to take that gold out. It's an 8 week of waiting time. You can't get your gold out. And this is what I'm thinking, dude, maybe if you make Bitcoin as a reserve, you can just sell it. Now, if you want to sell your gold, you can't because you can't get your hands on the gold. There's an 8 week of waiting time. Yeah. Ross with planes falling out of sky. I'll stick to terra firma for now. So there's an interesting story around, if you have a time, I think Wall Street has covered it in terms of how this whole gold trade happens at a much higher level, right? I'll probably spend a couple of minutes trying to explain this because I don't know, I find it very interesting. So when it comes to the physical gold, right, gold bars, London has been the center for centuries. When it comes to the financial instruments on gold, it's the New York is the center because New York is the financial district or financial capital of the world. Especially all the futures that gets traded on gold, etc. And what happens, like a lot of these big banks like JP Morgan, Bank of America, etc., they have a gold trading desk, right? And basically the the traders will buy gold, sell futures, do the other way around. And when you buy gold, you need to keep it for safe. That gold is generally kept in the vaults of the banks in London, right? So all the physical gold, even if you look at a GLD ETF, so when you buy a GLD, the issuer of the GLD ETF, which is, I think it's a State Street, they're supposed to buy physical gold and hold it against that your paper GLD claim. They hold that gold, not, I don't think it's in the US. Again, that's in London, in the vault, either in London or in Switzerland, in one of the bank's vaults. Right? So these big trading desks, either they buy the gold for their clients, other big buyers of the gold are central banks. So when they buy the gold, let's say JP Morgan, I'm a big trader on a JP Morgan gold trading desk. You bought a $10 billion worth of gold. That gold is sitting in London vault. And now I'm probably, trading futures here. I'm shorting the futures of gold um, because I have a physical gold. Now, if the gold goes down, my futures go up. The future which I've sold, I make profit on that, right? Now, once election, Trump came in, and we started talking about tariffs, right? What happened was that the price of the gold in New York that went up. So when the price of the gold in New York went up, the futures that you have sold, you suddenly start to lose money. And now if you are a trader, you're like, because futures start to lose money, I need to close that future, right? Well, one way you can close that is bring your gold and deliver the gold, right? Now you don't have that futures contract anymore because you've done the delivery. So that was why we suddenly, all the big trading houses on the New York wanted to get the gold shipped out of a London vault, bring them here because your risk management team is sitting on your overall shoulder saying, guys, your trade is losing money, right? Okay, well, I'm going to get the gold, deliver it to the folks who bought the contract, and be done with it. So that's why there was a lot of rush around trying to get the gold out of London vaults and over to the New York. And this happens because there is a difference in the pricing of the gold in New York and in London. Right? Generally, they will stay in tandem, but because of these all concerns around tariffs, the prices are diverse, and hence there is a rush to get the gold out of it. And another interesting, like so weird stuff, the gold bar that the New York banks would accept, that is a different size than the gold bar that is in the trades in the London market. You know how weird it is. So what they also do is the those banks who could get hand on the gold bars from the London bank, they take those, ship them over to a there are a couple of companies in Switzerland who specialize in making the bars of the exact the size which actually trade on New York. So they basically take the gold bars from the vault of London, Bank of England, take them over to Switzerland, they'll melt it, recast it in the bars that are accepted on the New York, and then ship them back to New York. I'm like, what in the world are we doing this? It is so inefficient to even transact in gold, right? So what the heck, right? We are living in the age of communicate. Everything is like under milliseconds, all communication. But when it comes to exchanging value, which we ascribe to the gold, it's so complicated. So there's a podcast on Wall Street Journal. That's where I heard all this thing. I'm like, wow, it's such an interesting to know, how some of these stuff works at a world, much higher level. So go and give it a listen. Probably 20 minutes long podcast, but I gave you 2 minutes summary on why there is so much of a rush. It is because they want to just close out and square out some of their future trades, and hence they need to get the gold out. Right? uh, it's a Wall Street Journal's podcast. I mean, look for WSJ podcast. Uh, They generally cover all the current event topic. It's not business specific podcast, but then sometimes there are business specific um, these topics. Of course, Wall Street is business specific, but they also talk about, let's say, Trump stuff and some politics also. So, but I think the recent one talk about the gold rush. Another one was around $81 trillion. I hope no one works here in the Citibank. I'm not going to offend them. Okay, if you're offended, so be it. Your bank is crap. And this is not the first time we have seen a mistake from Citibank. Citibank, someone had accidentally credited a client's account with $81 trillion instead of $280. Right? Were you, any one of you received $81 trillion from Citi? But anyway, I mean, this continues to show that how some of the banking systems are so crappy that you can actually make a mistake, and it went through maybe a couple of approvals. It went to two employees were unnoticed before someone flagged it 90 minutes later that you credited the client account by $81 trillion. And which also makes us think at the end of the day, the money in the bank is just a bits and bytes, right? That's all it is. You can just add a few zeros, and then the 90 minutes later they realize, oh, that's wrong. Okay, let's remove a few zeros. Right? But what a crazy stuff. And this is not the first time that Citibank has done it. One big case on the Citibank that we have seen earlier, I don't know, maybe 2 years, 3 years ago, was they were to send an interest payment from one of their clients to the creditor. But instead of sending an interest payment, they sent some a few $100 million, which was an overall loan amount. So the creditor, and I can't recall which the parties were, the creditor, and then later on Citibank realized, oh gosh, we were to send only the interest and we sent the whole amount. They tried to, recover back. And then basically there was a court case. And Citibank was saying, oh, it's not your money. They said, hey guys, we thought that you making your payment by full. You made your full payment. How do I know that it was sent in an error? I thought you repaid your loan in full. So it's not the first time. And it looks like an internal review found 10 similar near misses of 1 billion last year, which was down from 13 the year before. So, and I think today morning, maybe like 30 minutes before our meeting, someone talked about the maybe Financial Times have reported what the root cause of this 81 trillion is. So this account was flagged for a suspicious activity. And when an account gets flagged for suspicious activity, if you were to do a deposit, there is a separate backup screen, okay, that the employees have to use. And that backup screen gets pre-populated with 7 zeros. So if you have not removed those 7 zeros, if you have not deleted those 7 zeros, what if you added you some amount? That's what it goes. How crazy this is. Oh, anyway, so a little bit fun. I thought maybe it will be fun to talk about at a global level, a company like Citibank and still working on a systems which are so crappy. So no one is immune from these things. If you're thinking, hey, I'm just one guy and I don't have a huge systems, companies like Citibank do this, have these issues all the time. All right, looking at a sector one, the broadening continues. If you look at a healthcare is up 8%, financials up 7%, staples up 7%. But if you were in the Teslas and the Mag 7s or Mag 5s, yeah, those are down 5% and 4%. Okay? So this is where having a little diversified portfolio helps. If you have just kept S&P 500, you are still, percent and a quarter up. Not bad. You shouldn't be concerned about what's happening in the market. 1 week performance was bad. NVIDIA is down like 7%. So tech is red, but look at the green side. Healthcare looks green, staples look green, financials look great. Berkshire Hathaway is up 7%. It's a new, I think, all-time high for Berkshire Hathaway. They released their report, I think, the last weekend. prior weekend. So yeah, things are fine. Some specific sector and some specific companies are hurt more than others, but overall market is still okay. Jay is saying I'll be happy with the 1 day interest on trillion. If you get an $81 trillion, maybe you should immediately buy all the mansions on board and spend it. But I think legally you can't do it. That's a problem. Okay, so I thought, given where the market is today, that the market is almost, I would say, neutral to maybe 1% up or down. These were the price targets that we had reviewed at the end of 2024 and maybe at the first session of 2025 from various Wall Street firms. The highest coming from Oppenheimer with 7,100, and the lowest one was from BCA Research at 4,400. So within the Wall Street, you see how divergent the opinions are. Okay, even if you ignore BCA Research because that's kind of an outlier, the lowest one we have is 6,000, which is where we are right now. Right? Are we close to? We are a little less than 6,000. So what do you think? We're gonna make 7,100, or will all of them be proven wrong this time? To get to 7,100, it not be super expensive, right? It's like 25, 26. Yeah, more than the normal, but if you have a companies like NVIDIA, and if this year, I think market is pricing in what, 12 to 14% earnings growth. And if you get Fed become little more accommodative, reduce the interest rates, you might get a multiple expansion on top of it. So may not be too far-fetched. But if the sentiment in the markets, goes negative, the market soars. Right now, the market has started this year. Who knows where it's gonna go? So right now we are sitting below Cantor's estimation of year-end 2025. Ross is like, place your bets, yeah. But I just wanted to go and share that this is what the Wall Street firms are predicted. We are only 2 months, so who knows what's going to happen. But fun to keep an eye on that one. Other one, I want to talk about IBIT, which is the Bitcoin ETFs. I did tweet about it. It's a gift that keeps giving. Closed a few trades on IBIT. I still hold all my IBIT shares. But 15 weeks, if you are able to reduce your cost basis by 17%, and at this rate, in 2 years, basically, you got all your money back without selling any shares, right? So now, me personally, I don't see any reason of, maybe buying a spot Bitcoin on Coinbase when I can get a similar economic exposure to the same commodity and have ability to reduce the cost basis. I'm not that, on the extreme side of a libertarian saying, no, I need to only do self-custody. I don't believe in these Coinbase and other exchanges. My vehicle would be IBIT. And now if like my average buy price is 54, but the cost base is now 44. And what's in 15 weeks? It's a gift that keep giving if you know how to reduce your cost basis. Basically, this is what, remember I talked about reducing your deltas. This is what keep reducing cost basis. Now, if IBIT goes down, right now it's 48. Well, yeah, it's still okay for me. Right? Okay, next session we're going to look at last week. Someone asked me, what do I hold in my moonshot? Who was that? Who wanted to know what do I hold in my moonshot portfolio? So these are the tickers that I hold in my moonshot. For those who, just from a definition perspective, when I look at my portfolio, and this is at a very high level of portfolio construction, I want to have my portfolio mix of some of the very solid companies or at broad level ETFs, which I define as a core. That is the core of my portfolio. Then I'll have a portion of portfolio which will be like good growth companies. Yeah, there's a business. The companies have proven that there is a product market fit, right? And now the company is investing in focusing and trying to grow. It may not be profitable yet. It may take some time to become profitable, but right now they're in a high growth companies. So that's another part of portfolio. And the third portion of my portfolio is these are the moonshots. Some of them may not even have a product yet. It may very well go down to zero. Right? But these are called asymmetric bets. Right? It's like a lottery ticket is an asymmetric bet. Right? It doesn't cost you much. But if it works out, you know what happens. You can buy a yacht. So this is like an asymmetric bet, which I have is around anything around a Bitcoin. Is still an asymmetric bet. Ethereum ETF, Jumia, which is e-commerce in Africa, ARKK, it's all that ETF itself is a symmetric bet. BlackBerry is a symmetric bet. Nanox, which is trying to revolutionize the X-ray industry, is an asymmetric bet. Right? So Sridhar says no quantum. I don't want to add more to my Moonshot portfolio. So these are the stocks that I've been holding it for some time. These are not the ones that I bought, let's say, this year. Maybe ETH I bought this year because the ETFs were approved only last year. So ETH was the one which I bought last year. But these are the ones which I've been holding in. I understand more about these companies. I did not add any more to my Moonshot portfolio yet because I don't want to increase the the dollar amount in my Moonshot portfolio. But if there is a space, QTUM, yeah, quantum will be part of a Moonshot portfolio. I will not put QTUM into my core or a growth portfolio yet. If I hold QTUM, I'll classify it as a Moonshot portfolio. So very important before maybe I'll jump to the portfolio section because now I want to tie these two things together. Right? Hey, you might come and say, gosh, BlackBerry or whatever, pick any ticker, right? My God, Vivek is bullish on this one. I've seen him. I like his analysis. Let me go and get an exposure to it, right? And you go and make it as a 5% of your portfolio, and then a few more. What kills in the market is not what you bought, but what size have you bought it for, right? So now I'll jump onto the portfolio so that we look at the portfolio. This week I bought CrowdStrike. When we had a scare, I think the CrowdStrike was 375 or something. And then I had a QQQ. I had a short put that got assigned on QQQ. I'm not going to hold it. I already have a covered call on QQQ. Probably get called away. But these are the two stock transactions that have happened in a portfolio this week. No sales. So at the end of February, this is as of yesterday, this is my portfolio leaderboard looks like. And I'll share this at the end of every month. So if you have a questions, ask it now. Otherwise, wait for another month to ask questions on portfolio. So the top is still SPY, even though I look at a lot of individual companies, but I want to have my biggest position at a broad market index fund, which is SPY. The second biggest is Mercado Libre. I've talked enough about the company over years. QQQ became higher because of the recent assignment that I had. So this I would say is a temporary phenomenon because QQQ generally will be lower down the line because I hold a lot of other tech stocks, and this doesn't tell you the options impact of options. So I have a short calls on QQQ. So overall impact will be less. But because I got assigned a short put on QQQ, then SCHD is 4, Meta 5, Apple. Between last month, Jan and Feb, I'm low on cash because of the QQQ assignment. So cash has gone out and the Palantir has become number 15th position in portfolio. Okay, let me go to some questions. What are your thoughts on investing in QQ as an early stage investor? So right now, so QQQ, if you understand, it basically have the top 100 companies from NASDAQ. It's more tech focused. Right? Now, if you are a tech investor or if you want to get an exposure to tech without doing an individually picking individually tech companies, QQQ is a good vehicle to go there, right? It also has some of the financial companies which are listed on NASDAQ, right? But generally, NASDAQ is more known for, big tech companies, and hence the QQQ is equivalent to investing in the tech. Yeah, so it's a broad base getting exposure to the top 100 companies that trade on NASDAQ. But if you're feeling gosh, the tech has run up so high already, and maybe I don't want an exposure to tech, then look at other broad-based index ETFs, right? You got an SPY, there is an SCH. We have maybe around 6,000 ETFs. We have more ETFs than we have individual stocks on US. So you can construct your portfolio based on how you want it to be by just using ETFs. So if you're an early stage investor, yeah, QQQ is fine as long as you're okay with getting exposure to the tech companies. Aditya, what's your thought process on holding ACHD long term? So let's first understand what the ACHD does. So ACHD is basically is an ETF of a high dividend yield company. Now I hold ACHD not because I want a dividend, but when there is a little scarce in the market, when the investors become little jittery, where do they go? They will go to the companies which provide good dividend, because these companies have a positive cash flows that they can give it to the investor, right? So from a business perspective, these are good businesses. They may not be the highest growth businesses, but these are good businesses to um, to own, right? So when the market is going gaga, nobody wants to go on at a slow steady pace. Everyone wants to jump onto the Lambo speed, right? But when the Lambo crashes, then the people still take back and say, maybe I should be okay with the slow and steady, right? So if you look at SCHD, when the rest of the market, especially the tech, doesn't perform, ACHD generally is on green on those days. It kind of give a balancing. So either I could go and start looking at pick Home Depot, respective. Home Depot is a good business to own, right? Some of the big pharma companies are great business to own. Some of the, let's say, Chevron is a good business to own. But if I were to do and pick individual one, I don't have that much capital to get 100 shares of each one and then start selling the covered calls against it. So I was looking at this ETF, which is the dividend. It's a good give me an exposure to all the good high paying dividend companies. When I say high dividend means it's not that the dividend yield is like 17%, because that means there's some problem with the business itself. But 3 to 4% dividend yield. And if you look into the constituent of SCHD, it's got some good solid businesses, right? Which will not go down as much as, let's say, S&P will go down in case of crisis. So 2022, SCHD had done better than S&P. Right? So from that perspective, I hold ACHD, and its expense ratio is very less. So that's my thesis behind why I pick ACHD rather than trying to pick individual companies and buying share. I'm like, you know what? I'll just buy ACHD. And I want to hold it for, building more position on the retirement side so that I don't have to pay the dividend tax. But yeah, maybe once let's say if we have a cleanup in the tech sector, maybe if we visit 2000, year 2000 of AI, that year, probably I will sell maybe SCHD and maybe buy the tech companies. Right now, all the tech companies, all the QQQs are through the roof. Right? So I don't want to put more on that one. Is ACHD available on Schwab? Oh, no, I don't know. No. You can buy it on any, I've in my retirement account with Fidelity, you can buy it on any brokerage firm. It doesn't have to be with Schwab. It's an ETF. SCHD is an ETF. It's a US, it's the issuer is Schwab, it's a dividend equity ETF. So if we look at this last year, SCHD is up 4.7% because S&P is down. So it's kind of a give a little bit balancing. That's the reason why I hold it in my portfolio. All right, any other question? What's your portfolio CAGR for the last 5 years? I generally don't share the numbers because these numbers become meaningless. But I think when I started this for the first year, I shared the number. Then I realized it doesn't make any sense because it really doesn't tell you whether I'm investing well or not. Let's say if I tell you I made 50% last year, what does that tell you? It's information is meaningless to you, Bobby. If you meet me in person, maybe I can do one-on-one and tell you, but I don't want to share the numbers because it just misguides the people. If I tell you I made 50%, are you more willing to follow my stocks? You should not. Because you don't know to get the 50% how much risk I may have to take. Maybe I have to build a house of straws. Or if I tell you I made 15% last year and the market is at 27%, should you stop attending the meeting? Probably not. Maybe I'm building my portfolio so that if a tech goes down, the rest of the folks will be losing 50%. I'll be happy it's making 10%. You don't know. Right? So that is why I stopped sharing in terms of portfolio returns. But from my need perspective, I'm pretty happy with what the portfolio is doing for me, is able to build wealth for future as well as give me a cash flow to run my current needs. So now if you meet in 101, maybe I'll tell you the numbers. Okay. But sometimes numbers because if you drop a number, it will stick to the people's head and it doesn't really help them in a long run. So that's the reason. Now you take it whatever you may want to take it from it, but that's the reason I just don't drop the number in bigger forum. I'll tell you what I buy and sell. I'll tell you the reason what I buy and sell. If you like it, fine. If you don't like it, that's fine too. Alim says, despite the tech companies costing high right now, do you envision enough growth long term? Do you think it's a close to cap? It's depend on company to company. So I'll look at NVIDIA and tell you, I think now NVIDIA is probably, I think it is undervalued and we should buy. And when we get to NVIDIA, we'll look at the result. Do you still own ANET? Yes, I own ANET. It is not yet my top 15 position. I don't know what percent it is. I mean, I'll have to go and look at it, but I don't know it on the top of my head. But it's not in top 15. I only started building position in Arista, last year. And I don't want to go too big on Arista because that is, again, one stock that is driven by the need of networking from Meta and Microsoft, right? Those two companies constitute 36% of revenue for ANET. And why the Meta and Microsoft need so much of ANET? Because they're buying thousands and thousands of GPUs, which they need to interconnect. What if the AI story goes down? ANET is a good company. I will buy ANET if the market corrects. So it's on my watch list. But I am okay to wait and build positions slowly. Because that's, again, the overarching theme right now on ANET is the stock has been propped up by AI. If it comes to the valuation 15-20% down, maybe I'll buy it today. So I do have a put spread on ANET. Right now it's in the money, but it's a put spread. So anyway, I don't have to buy too much. But I'm okay to be patient and build a position slowly. So that's why I have not made ANET. I mean, I only started adding it last year. So it's not even 1 year on ANET. Bobby, I was just trying to understand if your portfolio beat the S&P index. So okay, if you're asking this, yes, I did. But even if I did not, I'll be okay with it. Because maybe I want to have a lower risk than what is in S&P. But that's my answer. You can never know just buying return because you don't know what's the corresponding risk the person is taking. I think that's very important, and you will only realize not asking this in, or the impact of not knowing this information when the market turns around. Have you not seen many of the star hedge funds going belly up just because they had one bad year? Because the amount of risk that they have taken. Bill Wong, right? Tiger Global went closed down the family hedge fund because in 2022. So this is where I wanted to come in. Before we get on to Moonshot, Moonshot is 4% of my portfolio. So when I come and talk about some of the companies, I talk about, hey, Bitcoin is great. iBit is a good vehicle. Don't go and load up your truck behind it. If everything in that portfolio goes to zero, today value, it's only 4% of my overall portfolio. Close to 70% is sitting in a core, which is like good, profitable companies, or it's a ETF. Right? And then close to 30% is sitting in growth companies. So if you're wondering, gosh, this like Jumia is down, what, 90% from its highs? Why are you still holding it? Dude, it doesn't matter. It goes to zero. Every company in the Moonshot goes to zero. It's only 4% of my portfolio. I can hold it. So never follow anyone in terms of what stocks they are owning because you don't know what portion it's constituting it. So I wanted to share this because someone asked for Moonshot portfolio. You need to understand what portion you are putting these asymmetric bet is of only 4-5% of your portfolio, then it's fine. All right. Maritza said they talked about Arista on Motley Fool. They're the same call about two main customers, but apparently they did. Or yeah, Oracle is the third one. They did talk about Oracle in earnings call. Jashi, they did mention Oracle is the third cloud giant that they have added, but we have yet to see. I mean, despite that, 36% is coming from Meta and Meta and Microsoft, which is a huge concentration risk. All right, let's go to earnings. Where are we? Earnings. All right, someone had earlier asked, hey, how do I look at the stocks? There are a few things, like some of these things I look at the stocks when I'm analyzing the companies. So let's look at Zoom. So I think last week I talked about, I want to look at Zoom and say, have they found the next act? I haven't looked at Zoom since COVID, right? I owned some part of it during COVID. Then I think 2021 or something, I sold it because I was not convinced to make it a bigger position and was trying to reduce, maybe 2022. I was trying to clean up my portfolio instead of holding 100 plus. I want to reduce it. So Zoom got X. So now I looked at Zoom again to see what they've done. What I did not like is the revenue growth is like almost none. Last 3 years, they're growing at 2%, 3%, 4%. Now, if you're looking at a PE and other stuff, it's not a bad business, right? Nice gross margin because it's mostly software, don't pay dividend. They do dilute you, but not by a heck lot. Okay, operating margin. I would like to see, if you call yourself as a software company, I would like to see your operating margin at the tune of 30%, right? Not much of a revenue growth. It is because Zoom hasn't been able to transition from, not transition, but been able to add another good line of businesses beyond video conferencing, which you and I are using. If you go back and recall our discussion, probably not. I don't know which recording, which session we talked about it. I said, if I were to invest in Zoom, the reason would be they make video as a platform on which other companies can then build solutions on top of it. That hasn't happened. So it's not a growing business. They do generate free cash flow, a decent yield. So this company, even though its company is only 5-6 years in IPO, when it comes to from a product life cycle perspective, it's already sitting at a mature life cycle. They have to find another growth area to supercharge the S curve. So I'm not interested in Zoom. You can tell me that it's cheap, it's not super expensive, it's not, it's cheaper than the overall market. S&P P is maybe around 25 or whatever it is. It's 22, 23. Forward P is, look at forward P is like 14, less than 14. Pretty. So purely from a PE valuation, traditional valuation, yeah, it is cheap. It is cheap for a reason, because the market is not seeing much growth, and it has not shown last 3 years of revenue CAGR is only 4%. Now, depending on what kind of investor you are, you can decide whether you want an exposure in this or not. But looks like they haven't, at least the numbers don't tell me that they have found another growth lever of in their business. Other one was AXON Enterprises. This is a stock I think I've talked about for a few years. Been in, I think I bought it to 50 and all that, but then I was cleaning up. This got the X, and now the stock is like 500 plus. So they reported earnings, revenues up like 33% to $575 million, profit up 31%, margins a little bit down, operating income was huge down. We don't know what happened. But overall, going beyond a quarter, 3-year CAGR. So when I look at AXON, it's growing revenue at a nice pace of like 30%. Right? It's a good revenue growth company. It's a growth company. And with a decent operating margin is not that great. 60% gross margin. Why I've not yet built position in AXON is I don't like it operating margins. It's a single digit. And I know why it is. It started as a hardware company. Now it is trying to build a SaaS offering, which is where the market is like going crazy on the stock and has pushed up the stock price. So over the past, I have 5 year, one day, past 5 years, it has pushed up the prices, I think somewhere around here, when they started talking about their SaaS offering evidence.com. Great. There's going to be a huge tailwind for it. I have not yet seen the proof that the SaaS offering is actually generating good margins for the business. Not yet. Maybe in future it will. So if I'm looking for another growth company to add, maybe. But right now my portfolio is not hunting for another growth company. And that's why I don't own this yet. I want their SaaS offering to become a real SaaS offering and start generating SaaS-like margins. Right now, forget about this quarter. Let's look at a year basis, right? I go back and look at their operating margin. It's been a negative to single digits, right? I think they moved into a lot of investment mode here. Maybe they're still building their SaaS offering. Maybe they are spending a lot on sales and marketing to market their SaaS offering, and hence their margins are low. And if you want to take an exposure in which, hey, they're building it, it means the proof is not yet there, but something which might happen in the future, sure. My portfolio is currently not looking to add new ticker, which is in this stage. So I've not taken exposure yet. But it's on my watch list. If you're calling yourself as a SaaS company, show me 20% operating margin. If I was holding AXON, probably I'll hold it. If it was already part of my portfolio, maybe I'll just keep it. Right? But then start generating the margins which generally SaaS companies would have. Then I will give you a SaaS-like valuation. But to me, it looks like that the SaaS-like valuation has already arrived in anticipation that in the future it will provide us a SaaS-like margins. But who knows about future? I'm not saying that they will not, But I want to, me as an investor, I want to see little more evidence of evidence.com, pun intended, being accretive to the margin profile of the company. Yeah. I don't know, you may have a different thought. You may want to say, I want to get in the train early and ride it up. But then make sure it forms either the growth part of your, I don't think it's a moonshot because the business have proven it's now just growing the business and making it profitable. It becomes a growth part of a portfolio. It's not going to be a core part of a portfolio right now. And then you position size it accordingly. Cool. Yeah, they have a good revenue growth, no doubt. 30% revenue growth, the chart looks pretty nice. But margins are not good. Some part of a time they might do the margins. Now someone can come and say, Amazon was just all about revenue. But Amazon had a better operating margins because they also had AWS later on. This does not. But it's not a bad company. But I'm saying currently, based on the valuation, a lot of a future SaaS-like margins has been priced in. And I just want to wait to see a little more evidence of it. So from a traditional valuation, pretty expensive, right? PE of 111. So you can just ignore it because the company is not even at a stage where you could even talk about doing traditional, valuation. I'll just ignore everything around here. PE, PS, because right now it's a story around what evidence.com can do. Because the numbers, except the revenue growth, which is like good, 30% 1 year, 3 year, 5 year, 10 year, revenue growth is good. What I don't like is the margin profile, 6%, 7% margin. And the market cap has gone up 60% on 5-year CAGR, whereas your revenue has grown up 30%. Lot of market is already pricing in much bigger, much better things from this company. If company delivers, great. But if not, then Mark will say, dude, why do I give you such a high pricing valuation? So that's on AXON. Next one, last week talked about Salesforce CRM. I don't own the stock. I don't own AXON. I don't own Zoom. So Salesforce revenue up 8%, 7.6% to almost $10 billion, 9.99 billion. Gross profit up 9%, gross margin 77%. It's a software company, so not surprised. Operating margin 18%. Only net income, 1.7%. They missed on both the revenue as well as EPS. This is what was a little concerning to me. If you listen to the CEO, Mark Benioff, he's like a uber bullish about the prospect of his company. Show me the numbers. You can talk all about agentic. I don't know, he's been out there talking all about AI agent, agent force. Does not showing up. They're not selling much. It's a single digit revenue growth company, or last core year over year 8% growth in revenue. 3-year CAGR, it is 11%. Right? Gross profit is grown up 14%. So I am not, might turn out to be a great company, but I'm not buying on Salesforce right now. They missed on both the EPS and on the revenue. It's not that it's trading very cheap. Right? If the business is not that great, but it is available at very reasonable or a cheap price, maybe you'll pick up. That's not the case also. And the business, it had good revenue growth in the past. Over the last 5 years, it's like revenue growth has been slowing down. So they have to find a new lever. Maybe because they bought Slack. I don't know how they've been able to even capitalize Slack. Haven't heard much around that. They did a few other acquisitions. Haven't been able to grow organically. Even with those acquisitions, haven't seen good revenue growth in the company yet. So to me, it looks like, yeah, Benioff talks a lot about it. He likes to bash other companies. He likes to bash Microsoft. But if you pull up similar chart on Microsoft, it's a sight to behold. It's a much bigger company growing at much bigger, with much bigger financials than Salesforce. 6%, 4% operating margins, over 5-year average. Not that interesting just yet. But it generates good cash flow, probably will be stable. To me, it looks like, again, the company like a Zoom, which is reaching a mature phase, they have to find another lever for growth. Maybe Agentforce we'll know it in a year or two. Because the Agentforce is pretty new. We'll know how much sales it is adding to. Then it'll probably be fine. But I'm not seeing evidence of that yet. Okay. I see another comment. Entered AXON when we first covered back in 2021. It's been good for me despite the latest. Good. Good for you if you bought that and held it. I bought it, and then when I was cleaning a portfolio, I sold it. But great. Yeah, 2021, I think that time it was what? Close to 100 or something. Yeah, somewhere around here we talked about it, AXON first time. Okay, the next one. Oops. NVIDIA. NVIDIA expectations were that they'll do $38.16 billion in this quarter, 85 cents EPS. Year over year, market was expecting it to grow 73%. That's a market expectation. What Salesforce grew year over year in this quarter? 8%. 8% versus 73%. Right? What they delivered, NVIDIA even beat that lofty expectations that they had. Right? NVIDIA delivered $39.3 billion and 89 cents as EPS. Look at the quarterly chart of NVIDIA. It's a crazy, crazy growth. Stock sold off. Because market is kind of got a customer, I would say, got spoiled by much, much bigger beats by NVIDIA in a previous quarter. So if you're a great company, market still sold off NVIDIA. NVIDIA has to be the greatest of the great company. Right? Now, if you look at, I'll not go through the numbers. A lot more commentators have commented on NVIDIA. So if you just Google it, you'll get to know a lot about NVIDIA. Right? I'm going to look at, like, say, your annual trend, right? Forget quarterly. Year over year growth, 114% increase in revenue. Like, all the numbers are in 3 digits. One quarter doesn't matter, but look at a yearly, it's a great one. 3-year CAGR, it's close to like 90% plus operating cash flows, 70% revenue growth. Like, CAGR means every year, assume you're growing 70%. Not many companies have done it. If you look at annual revenue, this is the way to analyze on the annual revenue, the huge skyscrapers. So NVIDIA is a good company. Of course, the stock also had its run. Its stock is up like 5x in 2 years, 2 years or 3 years. After the chat GPT, 2.5 years. And right now it's trading at a PE of 42, forward P of 27, PEG of 0.8. I don't think super expensive. So when you're looking at a PEG ratio of 0.8, that tells you, so PEG is your price, but divided by earnings growth. Right? So let's say if you're comparing between two companies, one PE is 50, another PE is 60. But the company with the PE of 50, the company with the PE of 60 is expected to grow at much higher rate in future then that might be a better company to buy. So to normalize for the growth, you look at a PEG ratio. So PEG ratio less than 1, again, it's not a gospel, it's not written in Bible, but PEG ratio of less than 1 is generally saying stock is actually trading at a lower than what the growth is expected to be in the business. Kind of a little undervalued stock, irrespective of what the PE is. Yeah, the PE is expensive because the stock is also growing like crazy. So this PE is a historical PE. When you talk about a PEG, you're trying to look at a future growth. Include that in your valuation. PEG of 1 is, yeah, it's decently priced. PEG of 2, it is little overpriced. PEG of 3, I would say it is overpriced. PEG of 5, it is egregiously priced. So when Palantir hit PEG of 5, I was started to sell Palantir at that point of a time. Of course, I still hold my gambling stocks. Other than that, I'm out. But this one shows PEG of 0.8. This is a TTM. So I don't know what the, maybe Finviz shows, is it the TTM or is it a current one? But look at your numbers. Again, not as a gospel, but even if Finviz shows 1.46, I'll still be say it's not super expensive, especially after this correction. Right? So from that perspective, I'll be willing to maybe now sell a put spread on NVIDIA. NVIDIA, where is NVIDIA trading right now? But it's at 124, right? It's back to where it was close to September timeframe, on 2425. Now that's again, when the pack tells you about the future earnings, what is being projected. If that doesn't happen, then the bets are off. But that's a way to bring in the growth picture into valuation. So to me, maybe I would rather focus on NVIDIA than focusing on Zoom. Right? And NVIDIA's margin profile is great. I don't think, okay, I didn't bring up the overall, the blanket chart, which is called this blanket. That profile is also great. So it's a good business. The concerns around NVIDIA becomes is around the valuations, right? Business wise, it's a good business to own. Last one for the earnings is Coupang. Any Coupang shareholders? Generally, people don't know about this company. So if there is no shareholder and you're like, you know what, let's skip it because you're not gonna get benefited, then I'll skip it. Chintan is okay. We got a couple of shareholders, so this will be useful. So let's look at Coupang. Okay, let's first look at here. So revenue was up close to 21% to 7.97 billion. Gross profit was up 48%. Margins up. Gross margin percent was up like 5%, which is good. Operating income up 33 digits to 312 million. But overall the net income was down 87%. If you only focus on net income, that's where the EPS comes from. EPS can be gamed. Right? That's why looking just as the EPS doesn't make sense. I need to focus on what your operating income is. So that is why I don't have a filter for saying, pick up all the companies with the low PE, because the E is your net income, which is an accounting income. You can have that by, let's say, changing the life of your server, and Google had done it. I'm not saying Google had done it because they wanted to show better earnings. Google anyway had a decent earnings. I think Microsoft or Amazon, they have changed the useful life of server so that they can get a less depreciation, and hence the EPS will go higher. So there are the net income can be gamed. What focus on is around maybe other areas like maybe operating income. Let's say if you borrow the money and you kept it in T-bills, you're gonna get 4%, or T-bonds 4%, 4.5%. That will add to your net income. But I'm not investing in you for putting money in T-bonds. I'm investing you for a business. So when you're looking at the business specific income, then you'll focus on your operating income. Okay. Anyway, so net income was down, operating cash flow was up, decrease in net income, and hence the EPS because of non-cash tax benefit that they had in 2023. It was a non-cash, some deferred reserves and the value, you revalue your assets, and I don't even know how that works. Any accountant here probably can help and explain it. I think way back I tried to understand it, now I forgot. But in terms of your valuation of assets, and then you defer some of the taxes and all that crap, it is basically an accounting way of changing your balance sheet, not really changing your income, not really tells about how great the business has been. And I think when I was looking for this, that time I realized that company actually report two type of incomes. I did not know it. Did anyone know? Maybe CPAs would know it. But people like us, I mean, I'm not from a financial services background, not from a CPA, from a tech side. We don't know it. Company actually report two type of numbers. I was surprised to discover this, I think last year. One number is for tax purposes. Another number is what you and we see in the SEC documents. So the tax related income is different and the general income is different. So anyway, so this, I'm like, okay, then ignore it. I'm not worried about that. Their net income fell down by 83% because it was related to some accounting stuff. A business side, they continue to perform on the business metrics. Consumer active consumers are up, product revenue was up, and they have basically product offering, the developing offering. Still continue to lose the newer offering, which they call as a developing offering, like Coupang Eats, the Taiwan expansion, international expansion. But they're growing like crazy. So this portion is a high growth portion of their overall business. This has been growing for triple digit growth for now, I think fifth or sixth quarter. Right? But doesn't make any money yet, this particular segment, because right now they're just investing in growing. Now, because Coupang is a South Korean company, it is also impacted by some things that they don't control, which is foreign exchange. Foreign exchange value. Now, if you really need to know how the business has performed, you look at FX neutral, neutralize that the won has depreciated against dollar, and then if you look at that perspective, revenue grew 28%. And okay, I'm not going to get to the far-fetched because they did an acquisition. So now they're telling without that acquisition, how would have grown? But 28% revenue growth is okay. Not the greatest one, but I think that's fine. I like the management. Pretty shareholder focused for long term. They're not playing quarter by quarter game, but trying to build the whole infrastructure for long term. So few things from the earning call. Now they're over $1 billion in free cash flow. Add a revenue of $8 billion in Q4, $1 billion to free cash flow. A lot of investment that they're done in logistics is actually yielding in, now starting to show the results. Same day, dawn day deliveries at 45%. So those who don't know Coupang, you can actually order the stuff a minute before midnight and it will be delivered before 7 a.m. the next day. That's what they call as a dawn day delivery. We don't have that in US yet, but Coupang is able to do it. Then, of course, they have a next day. So now they included the next day to thousands of electrical appliances. You can buy the tires and schedule an appointment. Tires will be delivered next day and you can get an appointment to fix your tires on automobiles by the next day. They're doing a lot of increase the assortment of fresh stuff for the same day as well as next day. So tomorrow is, let's say, your significant other's birthday. You forgot to bring cake, and tomorrow morning you need to get a cake. You can order it midnight. By 7 a.m. it will be at your doorstep. Right? Again, long-term focus strategy has been long view, willingness to make bold decisions and disciplined investments. When you find some of these companies whose CEOs are willing to take a short-term hit for long-term benefit, you find there will be times when you will find that the market has unduly punished it, because market sells off when you one quarter you don't do good, because algo will sell the stuff up before even the earning call happen and all that stuff, right? And then you can find it, and when you're reviewing these things, you're saying all the spending that they're doing is actually going to be good for future, and you can find these opportunities to buy these companies. Didn't see that in coupon, but we saw this on Mercado Libre when the stock was sold off at $1,700, 1750s, because in the previous, not in Q4, but in Q3, they invested a lot in building up the logistics warehouse in Brazil. And then their EPS was down in that quarter, and the market puked on it. Short-term focused. Versus if you know, hey, what they're doing is going to help them in building up the e-commerce infrastructure is good for the company. International, Taiwan is showing good progress, revenue up 23%. They launched their Wow. Wow is like Amazon Prime. It's that Prime membership equivalent for Coupang. And the customers continue to spend more. The annual spend of each customer, even the oldest one, grew more than 20%. Right? So there is nothing not to like in this company. And if you recall, I think last week where we looked at where the super investors, we have a company of Bailey Gifford in this, right? They got what, $5 billion in this one. So I'll still hold the company. I don't see any reason to not like it. If the management turns around and become, crazy in terms of spending money without worrying about how they're gonna generate cash flows, then we'll look at selling it. But management hasn't given me any reason. The last acquisition they did was for Farfetch, which was a money losing, but they turned it around within a year, made it a break even. And I like that stuff. Right? They fixed all the operations to make it a break even before a quarter before what they had promised. So I'm willing to give such management a little more leeway. All right, that was all the last week. Next week, Asif said, does Farfetch gives Coupang more options to expand outside South Korea? Yes, it does. So there's one question which no analyst had asked, and actually I had on my list that when I'm gonna review it, I want to see what they're doing, but there was no mention of it as well, which is Coupang had unveiled a service called R.Lux, which will be for luxury goods. What I was thinking was, now they got a Farfetch as well as they have their own service of R.Lux. How are they going to integrate, and eventually who's going to win, right? So, but Koreans, or maybe they'll roll up all Farfetch into R.Lux. But traditionally, Koreans like to spend on luxury goods. And I think that's where they went into this acquisition of Farfetch. The concern that I had when they acquired Farfetch was it's a money losing business. Operationally, also, it's losing money, right? Not forget about net profit, but operationally itself was bad, but they have turned it around, right? So that makes me more hopeful. But over the past 4 quarters, always they will tell you, including Farfetch, excluding Farfetch, how we are doing as a business. Right? But hopefully, I think if they expand into external business countries slowly, that will be better. So this week, management talks about going in Japan, and then I think earlier they were in Japan, but they pulled out of Japan. So there were questions of why again going into Japan. They said now we have learned more. Earlier, when we were in Japan, we pulled it out because we realized we can't run the business profitably. And we don't want to go and invest if we do not have a path on profitability. I mean, they talked about three things. One is obsession around the customer, and able to scale the operations to make it profitable should have a path towards that. This is now I think we have, because we have learned over past few years. Now we want to go back to Japan. So I like the management which has focused on not just growing crazily, but yeah, at some point of a time, you need to scale your operations and also generate money, right? So that's all on Coupang. Next week, little light for me. These are the four companies probably I look at. C Limited, CrowdStrike, JD, I own these three. Broadcom, I don't own it, but it'll be good to look at Broadcom overall. What's the AI play? What's the ASIC play? Broadcom will tell us the story around that. So that's on. I think we already covered that. So what, 12:15? Maybe crypto, if anyone interested, we can talk about it, but I'll rather answer any questions that you may have. Hang around for another 10 minutes and answer any other doubts, any other questions you may have, especially those who are new. If you want to ask any questions, shoot. If something I've not covered or you want me to look at next week, I think someone had given me a company for the next week. I got a name of the CEO as well as the market cap. Sridhar. So Duo. That's a Duolingo, right? Doul. Duol. Dual. I think that's Duolingo. The owl. Okay, Sridhar. Okay, yeah, I saw that. Do you post the meeting recording somewhere? Yes, I posted it on my website and I'll share the link. So let's see. I'll share you where it will be on the website. I'll share. Let me show that to you. So Duolingo, I'll bring up next one. I'll basically bring up that carpet. Again, I can bring up the numbers. Sridhar, you'll have to bring up the story behind Duolingo. Okay, so like 268 is already there. Once the 269 is posted, I will put up a message in the meetup. Generally happen latest by Monday. Okay. What else? No other questions? All good? Anyway, can we plan a session on crypto investment? I don't know how many people actually are interested. I mean, I've done a lot of sessions on crypto investment earlier, but then I realized not many people want to have it in their portfolio. So I only give an update. So if I can maybe spend next 10 minutes on giving you update on this week on crypto. Do you know why crypto market dropped recently? Yeah, let's talk about it. The reason why crypto market is dropping suddenly is because this is also high risk market. Not high risk market, but this is a high beta market. This is risk on market. So if the market is feeling risk averse, they'll sell the crypto off. It's like a NASDAQ on steroids. It hasn't yet become a mainstream. I mean, I would want it to be, but it's take its own sweet time. So when the NASDAQ is selling off, crypto will sell off. So let's look at what happened on crypto this week, right? All I saw was a good news on crypto. SEC is dropping case against a lot of crypto companies. Coinbase Consensus, which is basically Joe Lovin's, work on Ethereum ecosystem. Coinbase, you guys know. I think there was a lawsuit against Kraken that they did, and again all against Uniswap. So all SEC was doing was going and telling everyone, all those lawsuits that we basically sued you for selling unregistered securities, we're just dropping it. That is positive. I'm not sure that as What I'm afraid of is SEC going to the extreme other side, saying, go do whatever you want to. That also won't be good because there will be a lot of frauds. But I don't want the SEC to also use enforcement as a way to regulate the companies. No, come on, guys, tell us the rules, and then the business will work towards that rules. Okay. Other note came from SEC was that the meme coins are not securities. This is so crazy. Looks like they're finally figuring it out. They're like, this thing is crap anyway. Why we want to spend our time on this? Few other good things. CME, there was a news like yesterday that a CME will launch Solana futures. So if you are in Solana, this is bullish on it. Because once you have a futures, then it's a matter of time before some issuer will create an ETF on it. Because now it's the same playbook that we have seen with Bitcoin. Same playbook was utilized for Ethereum, that you have a futures which is controlled by a CFTC. Then when you put for in the futures regulatory CFTC, little more lenient. When you try to do ETF, then the SEC comes into, for SEC came into picture, but now they say you have a future, so they have the pricing is not rigged. They have a control on the, they have a visibility into how the markets is priced, so the things that the SEC want to look, they have access to it, and hence they were okay to do Bitcoin ETF. Similarly for Ethereum ETF, same logic. So now I expect a lot of Solana ETF applications to come in, because now once the futures start listing it, SEC doesn't have any other reasons not to do it. Right? BlackRock. This was an interesting news. For those who don't like crypto, but if you're having any alternative asset ETF or alternative asset portfolio, if BlackRock is managing your portfolio of alternative assets, you're going to get exposure to Bitcoin ETF. So yesterday, BlackRock added its Bitcoin ETF IBIT to its model portfolio for the first time. Now, the way this model portfolio works is, these issuers will have a model portfolio. Like if you have a growth portfolio, or, they added into their alternative asset portfolio. So I can then see, maybe, I don't know what the portfolio is, but the name alternative asset suggests that the things that they will have in portfolio could be private equity stuff, right? Some your real estate stuff. And now they're also saying, let's add Bitcoin to it. This is not your stocks and the bonds, but the alternative assets, right? Now with BlackRock saying maybe 2% of your alternative investment could get into Bitcoin ETFs, right? Now, generally these issuers, when they're trying to sell, they sell those model portfolios to financial advisors. So if you're a financial advisor managing money for your clients, you're gonna look at what's your client looking for. They got a decent investments on the stocks and bond. I want to get an exposure to an alternative asset classes just from a diversification perspective. Yeah, I'll pick up a model portfolio and use that. In Canada, Fidelity has included Bitcoin as a part of their conservative portfolio. They did it, I think, 2023, 1 or 2% allocation for the Canadian. That time, US did not even have Bitcoin ETFs, but for the Canadian, Fidelity has Bitcoin included in their conservative portfolio, right? So if you are a financial advisor, you're buying the conservative portfolio, you get Bitcoin moved into your that portfolio without you knowing. So this is generally will be bullish. What else we saw? States looking at Bitcoin investment bills. Looks like Utah is now into the last stage. Chamber 1 had done, Committee 2 had done, or the second chamber. I think maybe the House had done, now the Senate, whichever way. But this is if it get passed through this, then we'll go for a signature, and you can Google in and read what Utah wants to do it. But majority of these states They all are talking about maybe some portion of a state reserve fund should be allocated to Bitcoin. Maybe some of the pension fund should be allocated. They were at a different levels. They basically they're talking about using Bitcoin in the state economy, integrating Bitcoin in the state economy, which is bullish. Whether we get a federal level or not, there are many states that have already moved in this direction and at a different stages of it. Final one, there's a crypto round table with the president and with SEC chair. Oh, sorry, we don't have SEC chair confirmed yet, but with the new acting chairman Mark Ueda, uh, and looks at a lot of crypto CEOs are there. Brian Armstrong will be there. Circle Jeremy Allaire will be there. This is going to be a meeting with David Sachs, who is AI/crypto czar, to do a crypto roundtable to understand how to create a regulatory environment, how to move forward in the digital asset space, right? So all is, I don't see any issue around anything around which makes is concerning for me. One thing that was concerning, I think week, not last week, but a prior week was, I think that happened on Saturday or Friday, was the largest hack of buy in crypto history, which was a Bybit exchange hack, $1.4 billion. We can get into the details on some other. It will take its own 30 minutes to just talk about that. It's such a, even the hardware ledger, they had a cold wallet that got hacked. So it's an interesting story behind that as well. But yeah, I don't see any overall, if you're looking from a crypto economy perspective, I didn't see anything negative except that the prices have come down. So if you are looking at a limited window of, hey, in wherever in Feb it was at 108, or where it was it in Feb 108? And now if you're looking at, let's go to CoinGecko, it is at 84. Yeah, you might feel the pinch saying, hey, this is down, right? From here, or Jan or December or Jan, it is down. But if we go back and look at it, we're still doing pretty okay. We're still up like 84, 85. When did we even think? Those who've been attending these sessions, I mean, we talked about this stuff when it was like 2030. That part of the time, never thought it's gonna hit like 80K so soon. But it's a psychology, so I can understand why people are talking about why crypto is crashing, because move from 107 to 85 feels like a crash. I'm like, look that it moved from 60 to 85. We're still in uptrend. Right? But again, this is a space which is much higher beta. It moves much faster because there's a lot of leverage in this. There are international exchanges. You can take 100:1 leverage. And when you take those amount of insane leverage, when there's trades unwind, you just get liquidated. And the moves are very, I would say, are very pronounced, especially when it's crypto. So you got to be really careful. Don't. I mean, I don't take any leverage and all that stuff in this one. Cool. Alim joining first time. Yeah, glad that you are able to find something that you can use to better your own financial life. At the end of the day, each one of us should take at least some interest and some control of our own financial life. I mean, if you're not worried about your finances, I don't think anyone else would be. So learn something. We all are here to learn, bring up interesting topics you want to talk about, or you want to talk about a stock. Do let me know. When we initially say, hey, I want to talk about this stock, bring your story, and then we can jointly figure out, right? So with that, that's it for today. Thank you everyone for joining in. One housekeeping, there will not be any session next week. I'm tied up next Saturday. So I already canceled that session on Meetup. So Find something better to do with your time next week. You got 2.5 hours to spend next week, so no session next week. With that, thank you everyone for showing up and talking about some interesting stuff. Goodbye. I'll talk to you week after next.